closing beat, everybody. Happy Friday. How are you today? It is Friday, not Tuesday. You get confused, you know? Easy to confuse me here. Hey, so this is the Closing Beats, a stock market update show that we do for our customers every day and you guys that want to participate. Thank you for joining us. If you like what you hear today, maybe you'll hit the subscribe button. Also, thumbs up or something. You don't have to like it. You can hit thumbs down, I guess, but thumbs up if you like it. I appreciate that. We're also playing a game. It's called Guess the Dow. We have a winner to announce today. Every Friday, we announce the winner of this game, and if you're a customer, we'll credit your account $100, or you can take the gift card. But if you're not a customer, we will send you a $100 gift card for playing along. This week's winner is Pedro Santos. He was the closest without going over on the Dow Gas, 28629 even. So we've already notified Pedro, a $100 gift card to be on the way there to you. So good job. That's 2 weeks in a row that non-customers won, so giving them a run for their money. 3 weeks in a row customers did win, but this time it is just one of our viewers, so thank you, Pedro, for playing, and thank you for the rest of you for playing, and take your shot. You have until tomorrow at noon now to pick next week. Where do you think the Dow is going to close next week? No marketing. We don't play that game or anything. It's just a fun game. Anybody that's played can attest. We don't send out marketing emails or anything. So if you want to play along, take a shot. If you're the winner, we'll let you know. If not, I will not bug you. All right. We don't sell your information or anything either. You know how hard it is to build a group of people that actually want to give you information? We would never sell it or rent it or anything. So there's no catch to the game. It's just a fun game. Play along if you want. So congratulations, Pedro, there. Hey, also, we do classes every week for our customers. Real big on staying in touch with customers. And one way that I do that is doing classes every single week. For the next 3 weeks, we have topics that will include the Secure Act and all the geeky details as far as how it pertains to you. We're going to do the backdoor Roth IRA, the details of that. Got a lot of questions on that. So we're going to cover that one as well. And, of course, the process of how we would do it here and how we do it here if you're one of our customers. And then we're going to get back into Nest Egg and go over some of the updates, because now that there is the new Secure Act, there's been some changes in Nest Egg, all for the better, but we're going to cover that as well. So if you're one of our customers, all you do is log into the dojo, and when the class comes up live, it just pops up. All of a sudden, there I am, and we do the class, and all the replays are, of course, available. Okay, let's talk about the stock markets. You got the markets down by 233, which isn't so bad if you happen to be following overnight. 23 on the S&P, which also isn't so bad if you happen to have been following along last night and early this morning. I got like no sleep. I was so excited just watching this thing. The NASDAQ down 71 points on the day. Hey, yesterday, the S&P 500, let's pull up chart real quick. The S&P 500 closed at all-time highs. So, right there. There you go. So yesterday, before this nonsense, we closed at all-time highs. And remember, anytime something happens and people get excited or start telling you stats and things, ask why. What's the deal? Give me some significance behind this. Well, the closing at all-time highs for the S&P, now we use the SPY to gather this data, but the closing high for the S&P, that's only happened where it closed at record highs 6 other times in history. You know that? It's a very rare occurrence there. So what we're working on is actually saying, okay, 6 other times it happened. Now, coincidentally, 2018, that's the last time it happened. But otherwise, you got to go back to like 92 and then 76 and so on. So we're going back to see, well, what happened in a year where the very first day of the year started at record highs? Did we then produce more record highs? Things like that. So I'm going to do that, put it in a class for customers there. Work in progress, but just thought that was interesting. Only 6 other times in history. That is unique. Now, overnight, if you follow the futures market, I'll pull up the S&P futures here for you, just so we can kind of dig back. I'm going to go to the 5-minute chart. Huge range in the overnight S&P futures market. So this is where we closed yesterday, right up here. We'll zoom in a little bit more. This is where the end of the day was yesterday, all the excitement and all that great stuff. We go into the evening there, just hanging out, watching a little Big Bang Theory, trying to veg out a little bit, and all of a sudden, we fall apart. Airstrike. So the news basically of the day was we had an airstrike on an Iranian commander in Baghdad, by the way. It wasn't in Iran. Killed the guy. It was a drone strike ordered by us here in the U.S. That sent not only the price of the U.S. markets, global markets lower, it sent oil prices shooting higher. Oil was one of the big sort of standout performers immediately. It was up like 4.5%, like right away. Today, as we've gone through the day, the safe haven trades, your gold plays and silver and things like that, they all did really well. And so that was the gist of it. We'll cover the manufacturing index in just a second. But you got this, all of a sudden, this big sell-off. Continued all through the night. This range, by the way, if we go from about roughly the high, let's go a little bit lower. Okay, so from about the high here all the way down to the low for the night, that's 55 points on the S&P 500. Doesn't sound like a whole lot, so let's go over to the Dow just because we'll talk about this in a minute, but it's a bigger number. It's a little more exciting, makes for a better headline. You got 455 points from high to low, give or take a couple points there. So a big move overnight. You look at the day today and you go, well, hey, that doesn't seem so bad. Yeah, we erased yesterday, but it's not so scary when you look at a daily chart. I want you to notice what happened. It's called mean reversion. Very, very clean and simple to understand. What you had is you moved from a high all the way down to a low. Where'd you finish? Just off the midpoint there. If you look at the S&P 500, you got the same thing here. We came off of a high all the way down to a low. Where do we sort of struggle and not do anything else? Right about the midpoint between the highs and the lows. Simple mean reversion. People just said, well, anybody that wanted to sell took their chance. They had their chance, plenty of time to sell. Anybody that wanted to buy had plenty of time to buy. And all of a sudden people go, well, I don't know. It's Friday, right? I don't know if I should buy more. Should I sell and get out? And so the market's basically finished kind of flat. In those terms, obviously down on the day, but in those terms finished down on the day. So a wild, wild move overnight. Very exciting for those of you that want the markets to pull back. You ideally would have liked to see them close near the lows of the day, but that would have asked for quite a significant drop throughout the end of the day. So I'll just say we're good with that. I'll take what we can get in that respect. So that is the overall stock market there for the day. Now, we had some data come out, and it wasn't good, right? The manufacturing data came out today. It was very, very poor. If I pull that up on the charts there, here you can see we were expecting a bounce in U.S. manufacturing, and actually we saw another decline. So looking pretty bad there. You got to go all the way back, and I'm going to go over here, and I'm just going to put in show recessions. Gray shaded area is the recession. You got to go almost all the way back to the Great Recession of 2008 and 9 to find a lower manufacturing number than what we have right now. Anything under 50, by the way, is sort of widely considered a contraction in the manufacturing space. We talked about that the first time we poked through. We have yet to even attempt to get back above the 50 area. So very, very negative. What now? It's Friday, right? We're just talking today. We're just hanging out, right? I'm going to teach you something new. Inside, what is this manufacturing number? Actually, later I'm going to share another stat with you too about the S&P or the Dow. So in the manufacturing number, it's a survey. You wonder, like, how do they come up with these numbers? Who are they polling? What's going on? So it's basically a survey. They ask these purchasing manufacturers of different companies in different manufacturing sectors. Then they read the results of what they put out there, and a lot of algorithms tend to just read that, and then they respond to the news and everything. Separate story. A couple of the comments for manufacturing out there. There is a backlog of orders, backlog of orders is shrinking, and our new order pace is continuing to fall. That was in a computer space there. You had, what do we got here? Fabricated metal products said orders did not materialize. U.S. production has decreased. Bottom line is, lots of negative comments here. The construction market seems to have slowed for the end of the year. Overall, marginally up, but these were comments from actual purchasing managers inside of this survey that generated this report. Export markets continue to weaken for plastic resins. This is in the plastic category here. Mexican producers are really trying to sell product back into the U.S. due to weak in-country demand. So you got a lot of that. Customer market has softened, resulting in corrections for machinery. Chemicals said, due to sluggish sales, we've introduced promotions to try to generate new sales. So not very good in those terms. Gives you an idea where we're at with the manufacturing numbers there. So not good, right? Enough of that. Let's get into the sector breakdown here today and talk about some individual stocks or sectors. So oil, I'm going to mention that was the sort of the big mover of the day. We've drawn oil here in this uptrend. We broke above that today and closed above that in the response to the Iranian strike of the Iranian commander there, which the last real significant event that we have to go back was like September 14th or so. It's on the chart. We'll find it. It's got to be this right here. The last significant event was when Iran actually struck one of the Saudi oil wells. That was a 12% higher move for the price of oil. Now you notice it sold off since then because Saudi Arabia did nothing. They just said, oh, well, we're going to get back up and online real quick. You remember if you watched the show. They did nothing. There was no retaliation really at all. And so basically oil prices got back down to normal and Saudi Arabia got back up to work. Today, oil closing back above those highs in this area here. Iran did say that they planned a retaliation. However, the media says Iran has planned a retaliation. The fine print of their actual comments and tweets from the Iranian foreign minister there was legal retaliations. They're planning legal retaliations. They're not planning on dropping bombs. They've said, we're planning legal retaliations. Can you trust that? You know, that's up to those of you that follow that. I don't follow that. I just don't like how the media takes out words to make things seem scary. All right, so anyways, oil was one of the big movers today. You might want to look over at aerospace and defense today. Any stocks that you have in that category, Lockheed Martin, Raytheon, things like that, they did well. This is one of the ETFs that you can use to take a look at the aerospace and defense area. It was up just over 1%. Oh, I'll give you another one. ITA is another one, aerospace and defense ETF. I don't know the difference between the two. Those are common that come to mind. Over 1% there. And like I said, inside of that, you got a lot of stocks like Lockheed Martin just blasting off 3.6%. Raytheon, if you happen to own it, it's pretty much a staple in a lot of funds, up 1.5% there. So looking good there. Basic materials shifted a little bit lower, closed below the 50-day moving average. Inside of it, you have to actually look at, there you go. Lind was down on the day, down 2.6%. And what was it, Air Products? Yeah, Air Products was also lower, 2% below the 50-day moving average. Those two, by the way, make up 25% of the ETF XLB. There you go. So a bit of a weak day there overall. Transportation stocks were lower on the day, just by a little bit. It was really a broad sell-off. If you looked at the transportation index, it was just basically a broad sell-off. Little heavier in the airlines. Why the airlines? Price of oil went up on the day, right? That hurts airlines. So if you look through United Airlines, down on the day 2%. Delta Airlines, down about 2%. American Airlines, down 5%. Gives you an idea. You can, without knowing the stats of all these companies, you could see who is more heavily leveraged towards the price of oil. It's American Airlines, right? You've got 2% on Alaska Airlines. And FedEx in the transportation sector as well, down about 1.25%. So that's that one. If you want to look at just airlines, there's a JETS ETF. It's very small. I don't talk about this one much because it's a very, very small ETF. But this one is just focused on the airlines. In particular, the bulk of this ETF is made up of United Airlines, Southwest Airlines, which didn't do too bad today, American Airlines, and Delta, if I type them all correctly. So that's one way to play just specifically the airlines. But since it's only made up of mostly those four funds there, it makes it hard to justify a 0.6% expense ratio when you could just buy those four stocks equally yourself, or even dig in there and maybe buy the rest of the stocks as well. So something to consider. All right, home builders did all right today. Actually finished the day positive. You had a number of names. Beazer Homes popped up off those lows a little bit. Toll Brothers was the one that stuck out. It's one stock we happen to own, so maybe that's why it stuck out. I was just looking at it. Moving back towards the high of the range, awfully volatile stock lately. Lennar up over 1% on the day, so home builders did well, and I used the direct ETF to take a look at that. That's the ITB. If you look at the home builders, you're going to get a little different story, and it's sad that they call this the home builders ETF, but in reality, it's anything that affects a home. So it's Home Depot, it's Sherwin-Williams, right? It's Whirlpool, things like that, in addition to the home builders. So if you want a direct play, there's your lesson. One of the lessons of the day is you got the ITB as the direct play there. All right, taking a look at some of the stocks in the news. Tesla, I'm sure you happen to see some Tesla today. Up 3% on the day. They lowered the price of the Model 3s in China by just over 16%. Now, some of that included the upgrades. You know, the costs of upgrades, they lowered those as well. And so overall, really good there. More importantly, they beat their full year guidance. Remember the other day, there was an analyst that said they're not going to beat their guidance. They're going to come out at the low end of the range there, or under the range. They said they weren't even going to beat it, which their range was 360,000 to 400,000 vehicle deliveries for the year. And that's much higher than last year. And so the analyst said, no, they're not going to meet that. Well, Tesla actually came in at the low end of the range. They did 367,500 vehicles. I put a chart together because it's easier. Let's look at a chart. So we wanted to compare Tesla vehicle deliveries this year to as many years as we could go back. Quite impressive for Mr. Tesla over there. Here is Tesla's vehicle deliveries for 2019, 367,500. That's how you say it. 2018, 191,000, 50,000, 47,000, 25,000. Look at the jump in growth over the last 2 years. That just an easy kind of fun way. I should have probably stacked them the other way, but amazing growth there in terms of vehicles being delivered. You have to question, now with the Shanghai factory being up and running, even if they only add another 20,000 vehicles to that list, that basically outpaces what they did in the first 2 years. So pretty impressive there for overall with Tesla. Just wanted to share that with you because when you see a number, you gotta ask yourself, how does that number relate to everything else? 367,500 doesn't sound like a big one if you happen to look at some of the other auto manufacturers, but it's big for Tesla. So good job for them. And if we go back to the chart there, Tesla got a much deserved move higher, I think, even though it's extended, up 3% on the day. I believe you had an upgrade or two inside of that. All right, quickly, Apple down 1% today. It was almost positive for a part of today. I believe it even touched positive at one point today. Nope, hit right there, flatline. So almost went positive on this nasty of a day, but ultimately finished near the lows of the day. So maybe hinting at a pullback there. Got more upgrades from Bank of America and RBS. They both had the same price target. $330 was their price target. 12-month price target, $330. And RBS said that they were raising their target because of obviously improved sales, but customers' satisfaction with their current phones. I kind of thought that would be bad news. Like, if you're satisfied with your phone, you're less likely to go get a new one, right? So anyways, they think that that bodes well for them and their services as well, if you're sticking with the Apple phones. Humana finished the day just slightly higher on the day today. Goldman Sachs put it on their conviction buy list, so very good there. They expect their earnings to rise. It's up 42% in the last 3 months here. So obviously a very good, strong mover, and Goldman Sachs is on board with you if you happen to own that stock. Limited brands, this is Victoria's Secret and Bath & Body Works. I always get that one confused with Bed Bath & Beyond. Bath & Body Works, Smellies, things like that. Upgraded at Bank of America. They like the price. They like how cheap this price is right here. They consider this a discount. They also like the dividend yield overall, which happens to be 6.8% for limited brands. So for Bank of America, they said that in combination with improved performance at Bath & Body Works, they like the stock. So they upgraded the stock, and there you have it. So that's just a few stocks in the news for you today. 71.8% of the S&P 500 is above the 50-day moving average. That's a downtick from yesterday, and even yesterday ticked lower. So yesterday we mentioned kind of the underlying, maybe a little deterioration there, even though the markets were higher. Not everything participated. You kind of saw more of that today. I would have no way of guessed what was going to happen overnight, but you kind of got a little sense of a tiny bit of weakness based on that number. You had 20 new 52-week highs on the day. Those are going to be mostly your defense names. So I mentioned Lockheed Martin already. Raytheon was another one. In fact, 4 out of the top 5 stocks on the list today were defense related. So they did quite well. You're also going to see Lamb Weston. They beat on earnings. It was a great earnings report from them. So popped up to new highs. Didn't get a whole lot of attention today, but very good for them. You have 2 familiar names on the 52-week low list. Franklin Resources, which hit yesterday as well. It's been weak overall. And Macerich, or Macerich, however you say it, they hit 52-week lows. This has been a sort of a common one on our list there. If you're not familiar with them, this is a REIT, and they do shopping malls, right? Smaller regional type shopping malls, but they do shopping malls. And, well, you know, there's not a lot good going on with shopping malls right now because, you know, they say clicks versus bricks, where people are clicking versus going to the bricks and mortars. All right, so that's that. I want to share something with you here. I got a quick maybe lesson. I'll take your questions. We'll get out of your way. Did you get excited about today's drop? I know a lot of you are sort of short-term bearish, just hoping for a pullback there. If you got excited about today, you want to question that, right? Because, yeah, the markets fell. But the markets fell, and was it a very significant day? Like, was it a bigger day than the day before, or like the last drop or anything? You always want to ask yourself that, because if you're looking for a pullback or nervous about a pullback, you want to sort of look and say, okay, was that a significant down day that makes me cautious, excited, concerned? What happened? And so overall, today's day really wasn't all that bad. Now, you ever notice how sometimes I'll use the Dow and sometimes I'll use the S&P when I'm trying to share a study with you or share some interesting stat? There's a reason for that. So the Dow is focused on by your local media, local TV. You know how they'll go through every murder in town, a good story about somebody that gave something to somebody or helped a stranger. Then they'll talk about the weather for like 20 minutes. Then they'll go over to sports, and they've got their own studio for sports. And then after all that's said and done, they'll go, the Dow was down 330 points today. And then commercial, right? Well, they use the Dow because it's a larger number. It's a headline number. It grabs your attention when you see that kind of stuff moving around. It's not as impressive to say the S&P lost 20 points on the day. Okay, doesn't sound like a lot. You're not really that concerned. Although the percentages may be the same, it's not the same. So the Dow is used for headline numbers. The S&P is used for long stretches of data that you want to go back. In particular, I'll use the SPY. I use the SPY because that is the original, not only the original index fund, but it's the original ETF ever. It's the very first, the great granddaddy of all ETFs. So it allows us to have more data. I can go back and pull more data to produce any of these studies. So headline number. Today, the Dow starts lower. It has a low 233 points. You know that's going to be on TV. You're going to notice that. So what we wanted to do was say, how significant was today's drop versus other drops in the Dow? So the Dow gapped lower by just over 0.9%, basically 1%. So we said, okay, how often does the Dow gap lower by 0.9%? And if you're not familiar with what that means, I'll use the DIA ETF here. So all a gap is we closed the day over here, all-time highs. We opened the day all the way down here, right? So that difference between the open and, the close and the open is just about 1%, okay? So what we did is we went back and said, okay, Dow gapping down 1%. Does that happen a lot? Right? And if it happens a lot, then it's really not that big of a deal. If it's very rare, like the S&P hitting new all-time record highs on the first day of the year, then what's the significance to that performance-wise? So we look back at the Dow there. If you look back even just 10 years, right? We didn't have to go any further than this. We look back 10 years from today, right? And we said, okay, looking back 10 years, how often does the Dow gap down 1% or more? There are 121 days that this has happened in 10 years. That's about 5% of all of the days. Sounds rare, but that's essentially once a month. So essentially once a month, the Dow could gap lower by 1%, and it would not be that odd. If it does it more than once a month, okay, it's starting to get a little odd. Something may be wrong. So now you've got at least a very, very elementary way to say, okay, Dow gaps down 1%, happened today, not a big deal. Happens again a week from now, that's odd, right? Now you know that's something that maybe you want to keep an eye out for, or cheer if you want the markets to fall lower. So it'd be something that maybe you could cheer about there. So we'll see. Also, today with the market being lower, there were 1/3 of the S&P 500 was still positive. So it wasn't a broad panic, the end of the world is happening, which is unfortunate because I know you want the markets to fall. With me, we want them to drop a little bit. So it really wasn't a broad, massive panic sort of rally. And there were only 45 stocks that lost more than 2%, which is not indicative of like a broad, massive sell-off. Now that we can snowball into that, but as of right now, it was just a down day, although it looks like a big deal there. Harry likes the fact that Tesla was positive in a down day. I like it as well. That's good. I mean, it's very extended in the short term. It won't take much to get people to want to take profits on that one, given how fast it's moving up there. So we'll see. Do you reckon Tesla will pull back a little bit in the short term? You'd have to lean that way. I can't tell you what to do, but we've pointed out time and time again, stocks that go a little too far too fast. ConAgra the other day, right? A little too far too fast, you see those things tend to pull back, and it's very normal, right? There's not a reason to panic or anything. Will the VIX go up during the next pullback? That's related to VIX, correct? I saw it was up 400% during the last recession. It's a good defensive play. So the VXX is an ETF, which you could say like volatility on volatility if you're going to trade options or anything in that market. But the VXX responds to the VIX. You're correct. So it's a way to play the volatility index, just like you would say, I use the SPY to play the S&P 500 because I can't actually invest in the index directly. Will it go higher? It doesn't have to. If the drop is volatile, you will see more of a pop in the VIX. A great way to look at it today is if you take the S&P and you take the VIX, put them next to each other, put them on a 5-minute chart, and watch what happened. When the S&P started lower, obviously the VIX was higher. As the S&P started to settle out, the VIX started kind of weakening. right? The S&P wasn't moving, but the VIX started weakening because the VIX in general, we say it's a measure of fear, but it's a measure of the put contracts being traded on the S&P 500 index. So it doesn't have to go up when the markets go down, right? Typically, there is some kind of a correlation there. It's a very tight correlation, but it does not have to happen. Depends on the volatility. If you look back over the August decline there, yeah, VIX spiked quite sharply with the August decline. It also did spike with the May decline, although not as much because it wasn't as much of an aggressive pullback there. So that's a tricky product. You do not buy the VXX for a long-term hold. That is not the strategy. The ETF themselves tells you do not do that. So careful if you're going to do anything long term. That's a short-term vehicle only, and that's exactly how they word it on their prospectus. This is a short-term trading vehicle, not ideal or not suitable for long-term investments. Some of your preferred stock ETFs showed some strength today, while many of their holdings individually within the preferred ETF weren't that strong. That may depend on the weighting there and could also depend on the sector. Not every sector was weak today. There was a lot of good stuff out there if you're hunting around looking for ideas that are not stocks that are super extended, and that could be the case. Maybe it's a sector-based ETF, something like that. If you buy shares of stock on different days, then do they become long-term capital gains for the purpose on different days as well? When you sell, do the oldest shares sell first? First in, first out. Simple way to say it there, right? Did I say that right? First in, first out. So if you bought shares last week and then you bought shares this week, when you sell, these are the shares you're selling, presuming that you're selling the same amount of shares. Thank goodness it's all done automatically for you. Yeah. You think AAL, American Airlines, is a good long-term buy? It's a beaten down stock, right? A lot of people like these discounts. I can understand a guy that likes a discount. The issue here, if I had to be super picky, is that you're looking into a volatile stock, more volatile than the market, that's downtrending. If you don't pick the bottom, you have to expect more volatility in there than you could get by just participating in the market. There's only a 1.5% dividend yield at the moment, so that's kind of tricky. I think that's a tricky one there. It's the best I can say. In your job, you got a 457. You have to trade from one fund to another. You can't sell out. You can't go to cash. Yep. Do you suggest exchange everything into bonds or so in the 457, in most workplace plans, they offer a money market account. It could be called a cash account, very rare, but it could be called a money market account. It could be called a stable value market account, not a stable value fund, a stable value market, stable value money market. And if they don't label them that way, what you're looking for is blah, 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 .FDIC, right? And so whatever it's called is fine. But then if you see .FDIC, that's as close as you're going to get to cash. So maybe hunt for one of those first before you go committing to bonds, which bonds have a risk to them as well and are quite volatile right now. So if you're looking to try to have a synthetic cash position, do that or look for that. Is there a website you can watch in real time for stock rotation? No, just the platform. You could use just any trading platform, any more advanced trading platform. Probably difficult with some of the apps and things, but yeah, you can. So if you have a leading sector in the first 3 months of the new year, is that indicative that the same sector will continue higher at the rest of the year? Possible study question. It's a good one. I don't know how you pick 3 months, but it'd be interesting to see, is there any significance to one sector starting off strong? What's the performance like at the end of the year? It would also be fun to see at the end of the year, such as healthcare. Healthcare had the last 3 months that were quite strong. Anytime that sort of thing happens, so let's say over a 20% gain, how often do you see returns going forward? I love it. I love that sort of thing. And I'm getting kind of geeky over here, just to let you guys know. I'm learning Python, so there may be some weird charts starting to show up because got the data, I know what I want to say, now I'm just trying to learn to code it, get some help from Mr. Codeman, but we'll see. I'm a rookie. I think it's really interesting. That's my New Year's thing, by the way, learn Python. So if anybody knows and you want to stop by, you want to do some coding, All right, cool. I love it. Something has happened here. I think is this thing telling me we're done? Seems like the thing paused. But hey, I appreciate your visiting us today. I love that you're here and watching. We'll keep doing what we do, making this thing better and better every day. Try to share the geeky details with you. If there's something you like versus something you don't like, please don't hesitate to leave a comment. I don't mind. If you don't like some part of the show, you know, that makes it easier on me. We can drop it. But if there's something you like to focus on, leave a comment. I can't respond to the comments on these shows, but I will be watching. And so if there's any way we can make this better, that's fun. It's got to be fun. Don't give me the stuff that's not fun. I'm happy to look into it. You guys enjoy your weekend. We'll be back Monday to do it all over again. See you later.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.